Welcome to Bears in Exile. Today is Saturday, April the 7th, and this is a look at the financials, looking at Bank of America, Citigroup, FAS, FAZ, Goldman Sachs, JP Morgan, Wells Fargo, and XLF. And we're going to start off with Bank of America, BAC. Not too shabby, oops. Ending with a inverse hammer on Friday. You can see the short-term moving averages curling over, middle Bollinger Band above the short-term moving averages and the real body candle. Very bearish. Closing below the major price consensus level, also bearish. 14-day RSI moving average starting to curl over, bearish. Stochastics pointing down but getting low, also bearish. CCI up, RSI down, MACD down. MACD histogram down. Overall, pretty darn bad, but it is coming in on the long-term moving averages. They should offer some support. However, the important thing being, we have a new recent low, and you'll notice also that there isn't much in the way of anything here to stop it besides the long-term moving averages. So we are hitting the lower Bollinger Band, which also could provide a little bit of support to it, help slow it down. But nonetheless, nothing really here to stop it. And if we look at volume at price, we can see there's nothing here to stop it. So going down to the $8 level, entirely reasonable if we get a real pullback. Beyond that, major confluence of prices down here in like the 6.5s. Yes, there's a little area of support here just above $7, but $8, $7, and then back down into the 6s and the 5s. Not bad if we get a real reversal. Now looking at, because it's had a little bit of a down, looking at the 60-minute, trying to get a little more perspective. You can see the 14-day RSI moving average is still ticking down. Stochastics trying to go down and meet it. Up on the CCI, down on the RSI, slightly up on the MACD histogram, and the MACD going sideways, perhaps getting a bullish cross sometime soon, which would be fine to have a little bit of a bounce. But nonetheless, pretty darn good for the bears. Essentially a dollar drop to the next level. Going on to Citibank, C, you can see that we have already entered the long-term moving averages, so they are going to take some damage. Are barely getting penetration by the short-term moving averages, so it's not going to have a complete crossover, separation and crossover prior to entering the bar. That's okay. It's already there. Middle Bollinger Band above everything, and this one closing below the lower price consensus level for the new month, also very bearish. 14-day RSI moving average, look at that, all kinds of room to move to the downside. Stochastics already there, CCI ticking up, RSI ticking down, MACD ticking down, MACD histogram ticking down, very ugly. And so if this one wants to lead, that's totally fine. We can also see that we don't have any real support, except for the long-term moving averages, until 33. And if we pull it back some, we can also see that we don't really have a confluence of buying pressure until 30. So that's really nice. And not too much to catch it. Yeah, we have a little bit in here, but overall, once it breaks 33, we're definitely should be going down to the 30. Looking at the 60-minute, since this one has already had a little bit of a decline, you can see it broke the previous floor just 2 days ago, 2 market days ago that is, and there's nothing really here to stop it until 33.5 and 32, but the volume was not that great as we saw on the daily. So all kinds of room to move to the downside if we're going to get a real correction. 14-day RSI moving average already very low. Stochastics mix down on the CCI, down on the RSI, sloping up on the MACD histogram and MACD itself going sideways. So yeah, we are pretty close to what should be a bit of a bounce, and bounces are just fine. We just want this to keep going lower, especially in the daily time frame, and be able to hop on board. But it should be noted that we're not in the real correction as of yet. I know that it doesn't look like the down SPX, which we had some previous floors on the Thursday night video, but those need to go so that this one can confirm its downturn. Next is FAS. Very nice. And this one went down to its floor and it bounced. So, since this one is a whole grouping of financial stocks, it's going to be very important that this one actually takes out its floor, closes below it, and then we're going to have something. You can see right here that we don't have much previous floor until about 85. That's a huge move to the downside. Yes, we have the long-term moving averages to contend with, but we're below the major price consensus level for this month, and we have the middle Bollinger Band above everything. So this is mostly bearish. And we need confirmation in the Dow and SPX. The financials might be what breaks them, but nonetheless, it will be very important to see that happen and then move on to the financials, because we don't want that to not break and then the financials bounce because of some ridiculous plan in Euroland. So trying to play it safe. And here we can see we have a confluence of price at 90. Should be the next real level that it goes down to if we're getting that break. And then after that, it is much more stair-stepping, going to 80 and 65, and going to the 60-minute time frame. Get a better daily look. You can see here the previous floor and how we are just above it. 14-day RSI moving average ticking down, stochastics mixed up on the CCI, down on the RSI, sloping up on the MACD histogram, MACD barely going up at the end of the day. So, we have these lows and then fights, and a low and a fight, and now we're at a low. We need to make a lower low, but, there's always, a little bit of fight. So, whether we gap down on Monday or not, we should have some fight unless it's finally the race for the doors, which would be awesome, but I just don't know that the buy the dip mentality has passed. It certainly is very early for it to have passed. FAZ. Ending with a little hammer on Friday. 14-day RSI moving average ticking up, stochastics up, CCI up, RSI up, MACD histogram up, MACD up. Very nice. We would be going in for a test of the long-term moving averages. Normally we have some fight when that happens. You can see that all throughout this. Comes down and goes up to fight, it's pulled back in, goes up to fight, loses, goes down, comes up for a fight, doesn't make it, etc., etc., etc. So we do need to see some penetration and damage done to it, because look how strong it is. It's very, very strong. Indicators definitely are on our side. And if we look at volume at price, we can see that the next level is just above 26, which is a huge move from its current position. That in itself would be really nice. Above that we have the $30 area, and above that we have the, what is that? Well, it's a big area. It's actually, might as well just call it 40 and just below, because all of that is going to be major resistance. Still, that's a double when it's able to get back up to that level. So that's a pretty good deal. 60-minute time frame. Not bad. You can see it's already conquered the bar. It needs to come back down and bounce off of it for it to be a really bullish move. 14-day RSI moving average still ticking up, stochastics pointing down, CCI pointing down, RSI up, MACD histogram sloping down, MACD going sideways looking for a bearish cross, and since it's sloping down on the histogram, we should go back for a retest of the flatline long-term moving average bar in the 60-minute time frame, and then we want to see it bounce off. That'll be very bullish. Probably will take us through this previous high, and then it'll be and then it'll really be moving. So very nice, very nice. And Goldman Sachs, wow, this one is really weak too. Going into the long-term moving average bar, it will be doing some damage. We didn't get complete crossover and separation prior to entering the bar, unfortunately. Middle Bollinger Band above everything, and closing below the lower price consensus level for this month, very bearish, and not far away from this previous floor over here at about 113. Yep, 113.11. And we have two levels. We have this level and we have this level to get through. And once both of those are gone, what is there? Well, there's the 200-day moving average, so that definitely should have some support. But beyond that, there really isn't too much down here to stop it. If we look at volume, we can clearly see support at 115 area, and then beyond that, just shy of 110, and beyond that, not too much until the 100 level. So yes, there is some areas to stop it, try to catch it, but nonetheless, about $20 to the downside would be where it should go in a real correction. "60-minute time frame, you can see that it has broken away from the long-term moving average bar. It's turning bearish in the 60-minute time frame. 14-day RSI moving average ticking down still. Stochastics pointing up, CCI down, RSI down, MACD histogram very slowly ticking up, and MACD itself going down and sideways. So yeah, this is going to need to go up in the 60-minute and test that long-term moving average bar, but overall pretty nasty looking. So that is definitely welcome. JP Morgan. Notice how this one is has not gone as far as some of the other financials. We ended with a spinning top on Friday. We have the middle Bollinger Band above everything. We have the crossover of the short-term moving averages underway. We're hitting the lower Bollinger Band. We're not far away from the long-term moving average bar. And we've broken the previous floor. That's really important. So very nice. 14-day RSI moving average just starting to roll over. All kinds of room to move. Stochastics heading down fast. CCI down, RSI going sideways, MACD ticking down, MACD histogram ticking down, and all this room on the downside. If we look at volume at price, you can see that we don't have a real level of support until 38, which is a great move to the downside. Beyond that, this one is very much the stair-stepper in terms of support, with major support coming in at 34 to 36. I'm sorry, 34 to 35. So if it gets down, real correction, that's where it should be going, 35. "60-minute time frame, much stronger than many of the other symbols. 14-day RSI moving average already low. Stochastics mix, CCI ticking up, RSI ticking down, MACD histogram sloping up, and looking for a bullish cross on the MACD. This one should, as strong as it's been, this one definitely should be getting a bounce, and hopefully that bounce will fail. It won't get above its previous high, won't get to the ceiling, and that'll be a thing of beauty. Wells Fargo, very similar to JP Morgan. Notice we have not broken the previous low, and we're just barely getting the cross of the short-term moving averages and the middle Bollinger Band gain above the short-term moving averages and the real body of the candle. We did close below the major price consensus level, but we haven't broken or even tested the lower price consensus level yet. there is this huge area here that it has room to move to the downside in the event of a real correction. 14-day RSI moving average starting to tick down, stochastics following. Down on the CCI, sideways on the RSI, down on the MACD histogram, down on the MACD. Oops. And looking at volume at price, we don't have a really good level until 30.5. That's a nice move to the downside. Certainly the market wouldn't care for it. And beyond that, just above 29. And then the real level of confluence is down here at 26. And just above, but really just 26 is what I'll call it. So that in itself would be a huge move if we have a real correction. And not to say that the correction is underway. This is about potential, so that once we identify that the correction truly is underway, that we have the levels that we need in our mind. And that's what's important. I mean, that none of this isn't proven yet. We still haven't taken out the floor on this stock, and it's very, very important. 60-minute time frame, trying to see what it's doing. You can see that it's essentially going into a double flat line with the long-term moving averages and the short-term moving averages, middle Bollinger Band in the middle of everything. But we have the 14-day RSI moving average, still some room to move to the downside. Stochastics mix down on the CCI, down on the RSI, sloping up on the MACD histogram, MACD itself ticking down. Very mixed in the 60-minute time frame. We need to take out this floor. That'll be immensely important. And XLF, we pointed this one out in the daily running thread on Wednesday, because financials are very questionable at this time, and if they do roll over for real, the rally is over. You can see we came down for a test of the previous floor on XLF. It's not broken yet. The futures are very red for Monday, but we still have tomorrow for them to repair that damage. But nonetheless, we have this floor here. We have the middle Bollinger Band above everything. We're below the major price consensus level. Bearish. 14-day RSI moving average starting to tick down. If this one races to the bottom, it's going to be pretty. RSI ticking down, stochastics ticking down, CCI down, I'm getting out of order. MACD down, MACD histogram down, and take a look at our volume. Yeah, look at that. We don't have anything really until about 1470. That's a huge move. The market will not like it. And then beyond that, we do have a little bit of support here at the $14 area. And beyond that, if it's a real correction, down here at the $13 level is where we have lots of confluence. So very, very cool. That's a big move for this. And that's going to about do it. We will have more updates as the market either confirms or refuses the true breakdown of the market. Certainly though, financials, they look like a great opportunity for the bears if it turns out that this is the time. So, I mean, look at this, December. Bank of America down in the 5s. Is this entire run fake? That's a lot of money to be made. Citibank, going back to December, floating all over the place, but really 24 to, had a high at 30, but somewhere in the middle, 28, 27, that's a lot of money to be made if now is the time. FAS, December, $65. It's at 100 now. It's a lot of money to be made. FAZ,